XRP looks like a coiled spring. Price pulled back about 13% from its year-to-date high, but the setup underneath is getting stronger, not weaker. According to reporting from Crypto.news, the chart and the on-chain story now point to a potential break toward the $5 area. Source credited to Crypto.news. Let's start with the chart. Since January, XRP has carved a classic cup and handle structure on the daily time frame. The rim of that cup sits near $3.40. The base of the cup formed around $1.61 in February. Price completed the cup and is now working through the handle. Inside that handle, technicians can even spot a small inverse head and shoulders. That is the kind of pattern stacking that often precedes a decisive move. Momentum indicators back it up. Price is holding above the 50-day and 100-day exponential moving averages. That tells you bulls still control the medium trend. On Murray math lines, XRP just bounced at a key support and resistance band, which adds confluence. For confirmation, the clean trigger is a daily close above the year-to-date high at $3.65. If that happens with rising volume, the next magnet zone sits near the psychological $5 level. The invalidation line sits lower. A decisive break under about $2.73 would argue the handle failed and bulls need more time. Levels and framework as outlined by Crypto.news. The fundamentals on the XRP ledger are also improving. Total value locked on XRPL has climbed roughly 16% over the last month to about $85 million. Stablecoin balances on the network are growing too, now above $167 million, with RLUSD or RLUSD seeing supply expand to roughly $642 million this year. More liquidity on-chain means more potential activity, more fees burned, and a stronger base underpriced during pullbacks. These XRPL data points are summarized in the same Crypto.news report. There are also pipeline catalysts that could boost demand. Ripple expects to route hidden road transactions through the XRP ledger. The company's recent Rail acquisition is aimed at accelerating its stablecoin strategy, which could deepen RLUSD usage and improve settlement flows. If those flows land on XRPL, that is ongoing utility, not just headlines. Another big tailwind could arrive from the exchange-traded fund lane. With a pro-crypto SEC chair in place, Crypto.news notes that pending spot XRP applications could see approvals. Leveraged XRP ETFs from ProShares and Ethereum already exist and have gathered assets, but institutions typically prefer spot funds. If even a fraction of the capital that chased Bitcoin and Ethereum ETFs rotates into a spot XRP product that is fresh, programmatic demand that does not care about intraday volatility. What does a trader or long-term holder do with this? First, know your levels. $3.65 is the breakout gate. $5 is the first big target zone if momentum expands. $2.73 is the invalidation for the bullish handle. Second, watch participation. Breakouts that stick tend to arrive with expanding volume and rising open interest, not a thin push. Third, track the ledger. If TVL and stablecoin balances keep climbing, dips are more likely to find buyers. There are risks. Pattern failure is always possible. If macro shocks hit risk assets or if ETF approvals get delayed, the breakout can stall. Regulatory headlines can also flip sentiment quickly. Respect your stops and position size so one trade never defines your month. Here is the bottom line. The phrase coiled spring makes sense here because you have compression on the chart, stacked bullish structures, supportive moving averages, and improving network fundamentals. If price clears the rim and confirms above $3.65, the path of least resistance opens toward $5. If it loses to $73 with momentum, the pattern needs to reset. We will keep tracking the key levels, the ETF docket, and XRPL activity as it develops. Today's analysis is based on reporting and price levels from Crypto.news.